Hi, everyone. My name is Jason Q. I'm a managing attorney with the Nonprofit and Small Business Legal Assistance Programs at the DC Bar Pro Bono Center. Here at the Pro Bono Center, we provide legal support to local nonprofits and small businesses through our in-person legal clinics, education and training programs, and by coordinating pro bono matches between volunteer attorneys and qualified clients. To learn more about our upcoming events and to access our archive of information, resources, and past trainings, please click over to www.lawhelp.org, that's lawhelp.org/DC/CED. So we are thrilled today to have representatives from DC's Department of Employment Services Office of Paid Family Leave. Back in December of 2016, the DC Council passed an expansive new paid family leave program that will provide benefits to both employed and self-employed workers in the district. Today's program will focus on the responsibilities that employers will have starting today with respect to funding and supporting the program. Our presenters from the Office of Paid Family Leave will be Jaslyn Bryant and Michael Henderson. Those listening live will be able to ask questions using the questions feature of their GoToWebinar client. On the control panel, just look for a drop-down menu option that says questions. You'll be able to type in and submit your questions to the presenters. We will try to address as many questions as possible as time permits, and we'll do that all at the end of the presentation. Okay, so now I'll pass the mic along to our presenters. First presenter is Michael Henderson.
All right, so first we're going to give you some general information about the Department of Employment Services. And here you see on this slide our department's mission, which is to connect district residents, job seekers, and employers to opportunities and resources that empower fair, safe, and effective working communities. In addition to the mission, we have some services and programs here for you at the Department of Employment Services, primarily being general business services, apprenticeships, the availability of our American Job Centers around the city, as well as the all-important youth employment opportunities. And here we have a general overview of the paid leave law itself. As Jason mentioned earlier, the Paid Leave Act was initiated in December of 2016 and then became law in February of 2017. And this law has two primary milestones that the Department of Employment Services and the Office of Paid Family Leave are responsible for. The first is going to be the collection of taxes, which begins July of this year. And then the administration of benefits begins July of 2020. The paid leave law has three types of leave, the first being parental leave, which is available for up to 8 weeks, family leave for an individual to take care of a family member such as a sibling for up to 6 weeks, and then 2 weeks of medical leave for a person's own serious health condition. And we want to remind everyone that the total amount of leave available, regardless of the combination of types, will be 8 weeks per 52 weeks. And here we have some information regarding who's eligible for the benefit. There are two primary categories when looking at who counts as a covered employee. The first is going to be an employee who works for a covered employer in the district for more than 50% of their time. And then the second category is going to be individuals who work for businesses that are based in the district and they do not spend more than 50% of their time in another single jurisdiction, such as Maryland or Virginia. So we're primarily looking at where an individual is spending most of their time. And we'll have some additional information further into the presentation to talk about who's covered. Slide. All right, so who's classified as a covered employer? One thing we want to remind employers and attendees, the liability for the unemployment insurance program will define who is covered or liable under the paid leave program. So here you see the different types of employment that are covered under the UI program, which will also be covered for the PFL program. One of the most important distinctions is going to be self-employed individuals who are not covered under UI, but will have the option to opt into this program beginning in July 1 of this year. And we'll have some additional information about self-employed individuals in particular for you further in the presentation. Now, talking about employer responsibilities, there are 4 primary responsibilities that we want to cover in today's presentation. The first being registration. Now, if you're an employer who already has an account with the district's employer self-service portal for the purposes of our unemployment or UI program, you do not have to register a new account. You will use that same account that's used for the UI program to use for the PFL program. The most important thing we want to remind employers to do right now is to make sure that your account information is up to date. So this is your email address, your mailing address, and any power of attorney documentation that you may have on file if you do use the services of a third-party agent or payroll service provider. So again, if you already have an ESSP account, you do not need to register a separate account for the paid leave program. Generally speaking, the process that you currently use to report wages and pay taxes for the UI program will remain the same for the purposes of the PFL program, as the wages used for the UI program are also the wages that are used for the PFL program. There will be two separate payments, and we'll cover that in a bit of detail as we move forward into the presentation. The second primary responsibility, of course, is the actual payment of tax. And just like with the payment structure and timeline for the UI program, following the completion of a calendar quarter, you have until the end of that following month to remit payment and to process wages. So with taxes due for PFL collection beginning in July 1 of this year, this will be based off of wages that are reported for the second calendar quarter, April, May, and June. The next primary responsibility is going to be notifying your employees of the availability and the information related to this paid leave benefit. We anticipate right now that this notice that employers will be required to post will be a requirement beginning in January of 2020. And there will be three primary times that you have to provide this notice to your employees. It's going to be annually, at the time of hire, and at any time that you become aware as the employer of an employee's need or potential need for paid leave. And then finally, we're looking at the records that you're required to keep. A lot of this information is going to be documentation that you already keep on hand for the purposes of the UI program, as well as wage hour compliance or DCFMLA or FMLA. And we just want to make sure to remind employers to keep these documents on hand for at least 3 years. And we want to take a closer look at the actual tax collection timeline. Again, since taxes for the paid leave program are due in July of this year, we want to remind employers that this is for wages that are reported for April, May, and June. And again, this is information that you're already currently recording and reporting for the purposes of the UI program, so that process will not change. Once you begin uploading wages to our system in July, we will use that to calculate the amounts that are due for the PFL program. And once again, this payment or these wages are due by the end of July, just as with the UI program. So you want to make sure that all the information and payments have been received by then in order to be in compliance. And here we want to present some additional information for employers to make sure that they're aware of the responsibilities and their interaction with this program. First, we want to remind employers that determinations and payments come directly from the Office of Paid Family Leave. In a similar fashion to the UI program, employees will submit their applications to our office directly. You'll be notified of a claim being filed, and also an employee has to notify you of their intent to file a claim, but you do not have to make any determinations, and the payments come directly from our office and go to the eligible individual. Also, the existence of this law does not prevent an employer from adopting or retaining their own paid leave benefits, and the coordination of your benefits and our program are based on your established policies. However, an employer's established policy cannot prevent or diminish an employee's access to our benefit. So we want to make sure that an eligible individual who has a qualifying event will be able to access our program. But if you want to have some coordination, that will be up to the documentation and policies that you have on file. And now I'm going to pass to my colleague Jasmine so she can talk to you a little bit more about self-employed individuals.
Thank you, Michael. So that was what employers should know. I'm going to cover quickly about what self-employed individuals should know. And these are sole proprietors, members of partnerships, as well as independent contractors. So the first thing to know is that if you fall into these categories, you can opt in during 3 main times. The first one is coming up July 1st all the way through September 28th. And after this year, every November and December will serve as our general open enrollment, starting in 2020. If you become self-employed in between these periods, you can opt in within 60 days of receiving income that the IRS would consider self-employment income. The second thing to know is that once you opt in, you're continuously enrolled. What this means is every year you don't have to make any change in your election status unless you want to. So all you're required to do is continue to report your income and pay contributions. If you would like to leave the program and remain self-employed, then you can choose to opt out every November and December starting 2020. However, opting out does come with some restrictions if you ever choose to opt in again, or if you opt out too many times. Lastly, if you are self-employed and you work for a covered employer, then you can't receive double benefit payments. So you're allowed to opt to be in the program kind of twice in a way. For example, you work for someone 5 days a week who's a covered employer and they're reporting your income to us. And maybe you drive Uber in the evenings, or on the weekends you work as a graphic design artist. You're able to opt in and report this income. However, when you want to file a claim for leave, we're going to average this income together so that you don't receive more than the maximum weekly benefit amount, which is $1,000 a week. And we'll have more information for self-employed individuals in the future. Oh, wait. Oh. Okay. Oh, thanks. Okay, now going into funding the benefit. As Michael said, this is funded by a 0.62% payroll tax. This is based on the wages that you pay your covered employees, but it's not deducted from their wages. We're going to begin collecting this tax July 1st, 2019. And you're going to make these payments through the same online portal that you currently use for unemployment insurance, the ESSP. And all covered employers, people who are liable for unemployment insurance, are liable for this tax regardless of your amount of employees or if you offer existing benefits. And now just to show an example of how this tax is calculated. For example, you have $1 million in annual wages. You're going to multiply that by 0.0062. And you're going to end up with $6,200 annually. However, as Michael said, you are assessed as tax quarterly. So that ends up being $1,550 every 3 months. And so this is what you, the employer, would pay. And from this, your eligible covered employees would have access up to $8,000 a year in benefits. And that's assuming they're taking the full 8 weeks at a maximum of $1,000 a week. Now moving on to next steps. So the first one is employer engagement. Events like this, we have webinars, we just had a town hall yesterday. We have a lot of other exciting events on the horizon. So we encourage everyone to go to dcpaidfamilyleave.dc.gov. Let me repeat that, dcpaidfamilyleave.dc.gov. And there you'll find a way to access all kinds of other events, including webinars, town halls, as well as FAQs, guidances, and also contact us. The other major thing we're working on are the online portals. As Michael said, we're working on the tax portals right now, which on our end is 2 portals, but for you, the employer, you're only going to see 1 portal, the same one you use for unemployment insurance. In the next coming months, we're also going to shift our focus to creating a benefit portal. And this portal will be used by employees and self-employed individuals to file a claim, receive determinations, as well as information about payments. The last major step is rulemaking. Our final tax regulations are with council right now, and they are awaiting approval. I believe the ultimate deadline is May 16th. And if nothing happens before then, they're assumed passed. And we're also working on an internal review of our benefits regulations. And if you sign up on our website, then you'll get information when those are released for public comment. So before we get into your questions, we wanted to go ahead and cover some of our main questions that we've been receiving. So the first one is if employers can opt out. No. So we understand many employers already have programs you might have had for decades, or you're a very small employer with only a handful of employees, and generally most leave laws don't apply to you. However, this program is based on liability for unemployment insurance, not based on employee size or currently offered benefits. This does include nonprofits, and I think this gets a little confusing because some nonprofits choose to be reimbursable, which means they're not reporting they're not remitting a quarterly payment. However, because they are liable for unemployment insurance, they are liable for this program and will be required to make payments quarterly. Another big question is if there's a taxable wage limit. And we understand where this is coming from. As you can see, a lot of our program is based off of unemployment insurance definitions, and UI does have a cap of $9,000. However, we do not have a cap. So you're going to report the same wages. However, the total wages you're going to apply our tax to, but only the first $9,000 will be applied for UI. And this is probably our most common question, is how is an employee defined? So in sum, if you pay unemployment insurance for someone in the district, then you're going to report that same employee for PFL purposes. So I know when you look at it, you see 50%, you see locations, it kind of seems like you're supposed to track where your employee is every day within a quarter. However, if you follow UI, then generally it's going to be the exact same employee. So if you want to know if they're qualified for this program and you're required to report taxes, you're kind of want to walk through 3 questions. Did this employee work outside of the district these past 3 months? If they did work outside the district, was this work temporary, an isolated transaction, or transitory? And by that, it means, whatever they're doing outside of DC, the plan is always for them to come back to your DC office, whether they be a delivery truck driver who's going to different locations, Virginia and Maryland, or even an attorney who's out on a case for several months. If the plan is that they always come back to the district office, and that is where their real base of employment is, then they will be included under this program. However, if their work outside of the district is not temporary, isolated transactions, or transitory, then you're going to want to look and see if they've spent at least 7 work weeks in the past quarter outside of the district and 1 location. So what that means is even if they've been spending more than half their time outside of DC, that's okay, as long as they didn't spend more than half their time in Virginia or Maryland or even West Virginia. And we'll have more examples on our website to kind of guide people through, but in sum, for the majority of employers, the same employees you report for UI are going to be reportable for PFL. Another question we get is, what information are employers required to record and report? As Michael said, the exact same information you are already required to report for unemployment insurance. So you don't have to take any extra steps. The same form, we have a picture of it up there, is going to be used. However, I've been told many people don't see this form because this is only for paper filers, which very small number of employers. However, closer to benefits, then you will be required to keep additional records. However, these are the exact same record requirements under FMLA. And for those employers who are smaller and don't fall under FMLA, we'll provide more targeted guidance. Another question is, who pays the PFL benefit when the employee is on leave? As Michael said, this is issued directly from the Department of Employment Services. You, the employer, you are not required to make determinations. You're also not required to make any benefits. So while you may receive some information about their leave, like they're required to give you notice before they file a claim, or maybe they want to access leave under FMLA or DC FMLA, which is required to run concurrently with our program, then you might get some information, but in terms of the district's PFL program, you don't have to issue any payments or make any determinations. And this one isn't quite a question, but a lot of questions we get are about how this new leave law fits in with other existing DC requirements. So just working through the top row, Accrued Sick and Safe Leave Act, this is about short-term illnesses, as well as domestic violence related reasons, or caring for a family member for a short-term illness. So this is doctor's appointments, wisdom teeth removal. FMLA and DC FMLA is about providing job protected leave for serious health conditions, cancer treatment, surgeries, as well as to bond with a new child or care for a family member with these serious health conditions. Our program is about providing paid leave for these same reasons, parental bonding, or caring for yourself or family members' serious health conditions. And while there aren't job protection under our program, we do want to note there are retaliation aspects to be aware of, as well as many employees who fall under our program, they actually might have protections under other laws, such as FMLA, DCFMLA, ADA, or pregnancy discrimination laws, and things like that. And now working down, so they said the first one is paid. Our program is also paid, and FMLA, DCFMLA is unpaid. And the funding source is also different. So for sick and safe leave, the employers are budgeting this and replacing the salary. Our program is funded off of the employer tax that we've been talking about. And this is also why determinations differ. So for the first two columns, the employer is receiving the medical documentation, the birth certificates, working through the law and seeing if this actually qualifies. We will use a lot of these same criteria. However, the DOES will make the determinations. And the amount of leave differs. So for sick and safe leave, this is a couple of days. I think the max amount, depending on your size, is 7 days a year. FMLA, DCFMLA, this is substantial. This is 12 weeks or 16 weeks. Our program's in the middle. So, and we also only offer leave. Our leave varies based on the type of leave requested. So 8 weeks for parental bonding, 6 weeks for family leave, and 2 weeks for yourself. And as Michael mentioned, the maximum amount is 8 weeks. So the way this can work is maybe you took 6 weeks off to care for a sibling, and then the remaining 2 weeks you had a surgery you want to recover for yourself. Well, that's how you can hit 8 weeks through a combination. The covered employers also varies. So for the first two columns, as many of you know, it's all about the size of employees you have. Our program is based on unemployment insurance liability. And lastly, the employee eligibility differs. So for accrued sick and safe leave, FMLA, DCFMLA, the employees can't actually access these programs until they've worked a certain amount of time within a year. Or I think sick and safe leave is like slightly less than a year, but our program doesn't have these requirements. But we want to note that the benefit amount is based off the reported wages. And so if someone wants to take leave in the middle of their very first quarter, DOES would actually not have any information that they've ever been paid, so their benefit amount would be 0. So it's in an employee's best interest to work a certain amount of time so that their benefit amount accurately reflects their take-home pay to fulfill the goals of this program, which is providing paid leave, replacement for their salary up to 90%. And now we want to turn to just your questions.
Okay, great. So one that we can start with is, are there notice requirements for employers under the new regime like there are with other benefit programs? And if so, will DOES be providing notices that employers can use?
So yes, there are going to be notice requirements, and the notice that's required in the law itself is currently dependent upon our finalized benefits regulations. So the Department of Employment Services will be providing this notice to employers, and we anticipate that this notice requirement will begin in January of 2020. We're looking to update the information on our website, both our landing page at DOES as well as the DC paidfamilyleave.dc.gov, to reflect this information. So we will be providing some updates as to when the notice is made available, as well as when the initial notice requirement begins.
Got it. So another question, our organization has a paid parental leave policy that covers salaries for up to 60 days. It's my understanding that PFL will also apply to parental leave. How are the overlapping benefits treated? Can the employer, I suppose, cover only the amount of the employee's salary that is not covered by PFL?
So that determination will be essentially a business decision, because our benefits cannot be diminished, or the access to our benefits cannot be diminished by an employer's established policy. But if, for example, an employer provides more benefit and they wanted to offset the leave provided in our program, that would be up to the established policies that employer had on file.
Another question is, can temporary and on-call employees submit claims?
Yes. So again, as Jasmine mentioned, if you have employees that you are reporting wages for the purposes of the UI program, they will also count for the PFL program. And this includes temporary and part-time employees as well.
So what if an organization has an employee that works virtually from Maryland? The organization is based in DC, but it doesn't have office space, and the employee spends less than 50% of their time in DC.
So as we said, you want to start by looking at the unemployment insurance localization rules. And under those, it more likely than not, this employee should not be covered under unemployment insurance in the district. However, if this evaluation has already been done and the employer has consulted with DOES's unemployment insurance office and determined that even though they're virtually working from Maryland, it does count as district employment, then we would also count them as employed in DC for the purposes of our program. And the point is just to make sure, for the ease of both employees and employers, that we have a one-to-one of who's covered for UI and who's covered for PFL as much as possible.
Give us one moment. I'm just going through the questions. And I know that some folks might not have heard at the beginning, but there is a question field on your GoToWebinar control panel. Look for the questions bar in the main menu. Click the little arrow to create a drop-down menu, and then you'll see a field that you can ask your question. Okay, so someone is asking, our payroll service says that they will be handling the filing. Do we still have to use the portal for paying or reporting the wages?
So generally in the cases of a payroll service provider, they will already have their own account with the employer self-service portal that's linked to your account in the system. So even if they're processing all your wages and payments, it will still be tied to your account. And if they're currently doing that for you for the purposes of UI, they will also be able to do that for you for the purposes of PFL. So payroll service providers such as ADP or Intuit or Paychex do have the ability to process this wage and payment information on your behalf, which is why we want to make sure that you as the employer double check all the power of attorney documentation that you have on file on your account that authorizes these companies to act on your behalf, and make sure that if they don't currently designate these individuals to work for both UI and PFL, you'll be able to designate that leading up to the July 1 launch, and we'll make sure to provide some additional information on the employer self-service portal, such as POA templates or further guidance to help you make that decision.
Okay, great. So someone wants to clarify that the PFL benefits will apply to all DC employees and not just employees that live in DC. Is that correct?
Yes, so the benefit is tied to the location of work and not the location of residence. So you can have an employee who lives in Maryland and works in DC, and again, if their wages are reported to the Department of Employment Services, then they will also count for the purposes of PFL. So this is based on where the employee works and not where they live.
Great. So this is another question about overlapping benefits, just to clarify. Can an employer choose to make employees take the PFL concurrently or consecutively with their established leave? In other words, could they make employees use PFL instead of paying the benefit that they currently offer?
Yes, as Michael said, this law, under this law, you can't restrict your employees' access to our program. However, how an employer wants their current programs to coordinate with ours is entirely their decision. So if it works best as a business decision for their program to be required to run concurrently with ours, that is allowed. It just can't be done in the reverse where they're forced to take that program and they're not allowed to have access to ours.
So folks want to make sure that the new law is applicable to nonprofits the same way as other employers?
So yes, typically nonprofits with the Department of Employment Services may have elected to be reimbursable, and they may not typically be remitting payment every quarter. They only remit payment when there's an actual claim filed against them. However, for the purposes of the PFL program, all employers are treated as contributory. So nonprofits who are currently reporting wages for the UI program will now have to also process payment quarterly on those wages for the PFL program. because all employers, including nonprofits, will be treated as contributory and will be liable for PFL if they are liable for UR.
Will an employee be able to take paid leave if the qualifying event takes place before July 1st, 2020?
So this is one of the things that we're looking to further clarify in our benefits regulations, and they will go out for public comment in the near future. So we will have some additional information that specifies when the first qualifying events will be able to be submitted. However, we do want to remind everyone that the first receipt for claims that the department will be able to take will be beginning July 1, 2020. So in the future, we will have additional information about which, if any, qualifying events that occur before July 1, 2020 may be eligible for benefits, but that's going to be following our next round of public comments on the benefits regulations themselves.
Okay, great. So another question, does paid family leave cover the full salary of an employee that files? And how would that work for temporary employees whose pay and hours might vary by week?
So typically, this program provides a wage replacement at about 90%, up to 150% of the minimum wage. And then anything above that, you're going to get half of the amount. So for example, say you have an average weekly wage of about $900. That means your weekly benefit amount would be 90% of that, which is $810. And then in contrast, if you had an average weekly wage of about $1,000, you would get 90% of that first amount, which is the $900, and then half of the amount that exceeds the $900. So in this case, you would get a weekly benefit amount of about $860. So it'd be that first $810 plus the half of the difference, which is $50. And once again, we want to remind you that the maximum weekly benefit amount is going to be $1,000. And generally speaking, you would hit the maximum weekly benefit amount once you have about $1,200 in average weekly wages.
Okay, great. Some folks might have missed the prior question about nonprofits and minimum size. So could you clarify, is there a minimum size before you're eligible for the program for nonprofits?
And we just want to say again that there is no employee threshold for the paid leave program. Once you are reporting wages for any individuals for the purposes of unemployment insurance, you will be determined as liable for the paid leave program as well. Even for nonprofits who are typically reimbursable and only reporting wages, you will also have to remit payment quarterly for the wages that you do report.
Another question, is there a limit on the number of times an employee can receive PFL benefits in a year?
So the maximum amount of leave will always be 8 weeks in a given year, but there is no limit on the number of qualifying events that an employee can have, because leave can be taken intermittently and amounts no less than 1 day, or increments of no less than 1 day. So with the 8 weeks, the combination of qualifying events does not have a cap, just provided that an individual cannot take more than 8 weeks per year.
Someone would like to clarify that the maximum benefit, is that a flat $1,000 per week, or is it 90% of earnings up to $1,000 per week?
So it is, the max itself is a flat 1,000. However, in determining your weekly benefit amount, it's going to be looking at the wages that are reported for you. So there's effectively a base period. It's going to be the highest 4 of the last 5 completed quarters. And once we look at that amount, we will divide that by 52 to determine what your average weekly wage is. And your average weekly wage is going to be put into a calculation to determine what your weekly benefit amount is. Generally speaking, if your average weekly wage is equal to or less than 150% of the minimum wage, which beginning in 2020 will be $15 an hour, you will get a 90% wage replacement. Above that, you will get 90% plus the half of the difference between your amount and the 150% of the minimum wage. We will also be there currently is a benefits calculator up on the website, the main DOES landing page, and we'll be having some additional guidance on how to calculate or determine what your weekly benefit amount would be.
This is a little bit more towards the benefits side again, but when should employees apply for benefits, and how long would it take for the benefits to kick in or for them to receive the benefits?
So as Michael said, beginning July 1, 2020, employees will be able to file a claim. And just to kind of walk through the full process and quickly, so when someone wants to file a claim, they're required to tell their employer at least 10 days in advance. And then they're going to file a claim on an online portal, very similar to the unemployment insurance portal. And then within 3 days, we are required to notify the employer that a claim has been filed so that they can confirm employment as well as reported wages. And then within 10 days of receiving the claim, we will issue determination. And within 10 days of that determination, we're required to then issue a payment. So in total, I think the maximum is about 20 days from the first time you file to receiving a payment.
And a question related to that, I saw that there were notice requirements that employees should be giving some notice to their employers before if they have anticipated leave. Can you talk a little bit about that?
Yeah, so this is going to be very similar to the notice requirements that they already have to do for FMLA or DC FMLA. So, and we also don't want to get this mixed up with the employer notice requirements, because there is a component where if an employer is aware that someone needs leave and that they've gotten some type of direct notice where someone has said in passing they're getting a surgery, or they're letting you know they're going to need some time off work for something that most likely qualifies under this program, then an employer is required to provide notice of the program. And so those 10 days for the employee, when they think they're going to file a claim, they're going to issue some type of notice to their employer. And we'll have more guidance in our benefit regulations to what exactly this notice is going to look like. But in general, it's going to be something that an employer is going to be able to keep as a record, that formal notice letting them know that they're filing a claim.
So if an employee exhausts that 8 weeks of leave, when does the cycle start again? When does it refresh that leave bank?
And then the refreshing of benefits will So there will be some information included once the regulations go out for public comment, and our office is currently in the process of finalizing that documentation. So we will have more information about the use of benefits following the completion of a calendar year, or the 52-week period following the exhaustion of benefits. So that information is definitely going to be coming. So please stay tuned and keep an eye on our website for more information.
Great. And some people are asking, could we get the website again for the website to get more information about the program?
Yes, it's dcpaidfamilyleave.dc.gov. And once you access there, you will be able to see ways to contact us, as well as some of our social media handles and other useful websites.
So folks are asking, how do we get a copy of that poster that explains the benefits to employees, and what's the timeline for that?
So you will receive that most likely January of 2020. This poster is going to encompass many things that are going to be in our benefit regulations, as well as subsequent guidance. So right now we're focusing on tax. So until the benefit regulations are final, we won't be providing this notice. However, until we provide the notice, you're not required to post it, obviously, but it will be available ultimately online for printing.
You mentioned that the benefit regulations are still under development and about to be finalized, but can you talk about some of the circumstances when an employee could be denied a claim?
Yes. UPLA is based heavily on FMLA and DC FMLA. So the same reason someone could be denied under those programs by, an employer's HR, by following those laws, are the same reasons they could be denied under this program. We do want to note that the UPLA is more expansive. So some, for example, taking family leave, there's some family members that, while would result in a denied claim for FMLA, would not result in a denied claim for ours. But in general, we are going to receive medical information, the doctor's recommendation for the length of time to recovery, as well as, proof of a birth, adoption, or foster child, things like that. And as long as everything looks valid, we might follow up. If we have additional questions, we're going to approve it. But if something is an illegitimate claim for the same reasons, FMLA, DC, FMLA, in terms of this looks like kind of wonky paperwork, or this isn't a licensed doctor, or it's outside of a certain window, then it would be denied.
Okay, so I had a question about the online portal. So you mentioned that it's the portal that folks are currently using for unemployment insurance purposes. Should folks do anything if they haven't registered for that portal? Do they have to create an account? And if they are already registered, do they have to recreate their account or update their account in any way?
So for employers that currently have an account with the Department of Employment Services in the employer self-service portal, you do not need to register a new account. You primarily just want to make sure that the information in your account is up to date. So this is going to be your contact details, your email address, as well as your mailing address, because we will be continuing to send out information both directly to employers via the registered email, as well as to the address that you have on file for mailings. For employers who individuals who are looking to become employers in the district, or who are preparing to become employed, or self-employed individuals, you will have to register an account. If you're self-employed, this registration opportunity begins July 1 of this year. All other employers would be following the standard procedure for registering with the Department of Employment Services for the UI program. And also, if you are an employer in the district who's not currently registered, you would also have to register with the Office of Tax and Revenue as well.
So that July 1st, 2019 start date, is that the date that employers are begin to pay into the program and the date that employees can access benefits, or is that a different date?
So it's a similar date. So the tax collection will be July of 2019, and then we're going to have the administration of benefits begin in July of 2020. And again, we want to remind employers that the wage filing and payment process, or the timeline for this, will mirror that for the UI program. So if you're filing wages that are collected from April, May, and June, you will have through the duration of July to report those wages and the process payment. So both wages and payment have to be processed by July 31. And then for the third calendar quarter, July, August, and September, your wage reporting and payments will be due by October 31st.
Okay. So we know that the starting rate for the employer contribution is 0.62%. Is that right? Is that scheduled to change over time, or what's the process for that?
Yeah, so currently it is 0.62%. And starting October 2021, the CFO will evaluate our trust fund, and the tax rate could be adjusted up or down, as well as the maximum weekly benefit amount of $1,000. So any changes to the tax rate and the maximum weekly benefit amount will begin October 2021, and then they may occur any October after 2021 annually.
Okay. Here. Do folks have any other additional questions? Just a reminder that you can use the questions tab in your GoToWebinar client. I'm just scanning to see if there are any issues that we haven't touched on yet. Also, another note that if you do have additional questions that we didn't get to, or that you think about later, there's contact information on this final slide for DOES. You can also email us here at the DC Bar Pro Bono Center. My email is jqu@dcbar.org if you'd like to submit your question that way. So another question is, does the program only apply to people who are covered under employment insurance? Is it fully overlapping?
So yes, generally speaking, the definition of covered employer for the paid family leave program is derived from liability under the unemployment insurance program. So to be a covered employer, you have to be responsible or liable for and pay taxes on behalf of your employees to the Department of Employment Services. The one primary exception to this will be self-employed individuals who will opt in directly and report their own income, their self-employment income that's reportable to the IRS and then beginning in July of 2020, they will have the ability to apply for paid leave benefits as well. And we do want to remind potential self-employed individuals that there are some restrictions in terms of the number of times you can opt in or out of the program, as well as the time periods that you can opt in or out of the program. Beginning in November of 2020, that will be our first annual open enrollment period. And then following that, every November and December, individuals will have the ability to opt in or opt out of the program. Self-employed individuals that are opting out of the program, once you've opted out 2 or more times, there is a restriction on the time period before you are able to opt back into the program. And we will be providing some additional information on the website and through additional events and webinars to specifically address self-employed individuals.
Great. So I think we might have touched on this issue before, but just to clarify, do employers need to be tracking where their employees are working at all times because the benefits are only calculated based on work performed in the district, or is the calculation just based on the total wages for a covered employee?
So the calculation is based on the total wages. So the same wages you're reporting for unemployment insurance in the district, those are the same wages you report for our program. So in the same way that for district UI, you're not reporting the wages based on where they worked, and in the sense that if someone goes on a sales pitch for 2 hours in Virginia, you're not going to exclude those wages for district UI. You put them all into the same pool. You're going to do the same thing for PFL. So that's kind of a business decision if you want to track them, but as we've stated, we believe the majority of employees, if they're covered under unemployment insurance, meaning their work is localized in the district, then more likely than not, they are the same exact employees for PFL. However, if you do have some employees who routinely are working outside of the district more than 7 weeks a quarter, like every 3 months, and the work isn't temporary, isolated, or transitory, things like that, like it's a substantial amount of work and they're regularly working outside the district. Well, one, then they might not actually fall under district unemployment insurance. That's something to look at. But if they do, then that's when you might want to consider doing some type of tracking software. We have talked to some employers who this is a routine thing for them, and they already do it for their unemployment insurance, and they just use tracking software. However, the majority of employers, your district employees are mostly working in DC, and you're aware of that. You don't need to take any extra steps to track their time every time they leave the district.
So for that initial July 1st, 2019 tax collection, what would be the deadline for making that payment?
And then the timeline or the payment timeline will mirror that for UI. So you have until the end of the month following the close of the calendar quarter. So for Q2, that's payment due by the end of July. For Q3, that's payment due by the end of October. And for Q4, that's payment due by the end of January.
Okay, so what about employees that a company hires through like an agency, like a staffing agency? How would that work with paid family leave?
So that's going to depend on who is reporting the wages. There are some situations where there might be a professional employment organization, but whoever is the entity that's reporting the wages to the district will also be the entity that's processing the payments for the taxes that are owed on behalf of those individuals. We'll have some additional guidance and information for these types of organizations or the individuals that are using these types of employment services, but we want to always focus on, so who is paying the wages, because that's where the tax is going to be based on. It's based on wages paid to district employees or employees working for district employers. So who's paying those wages will then determine who is liable for the taxes, and it will follow the current processes that are established for the UI program.
Mm-hmm.
So folks are asking about the kind of resources that they might be able to find, maybe through the website that you mentioned earlier. So someone's asking, for example, can we receive a flow chart for the process of filing and notifications?
So in the next coming weeks, there's going to be a lot of changes to the website. But right now we have FAQs for employers and I believe employees. We also have an employer guide slash toolkit that will be available online in the next coming weeks. And that's going to have a lot of different examples. There's also some recorded webinars that has the slide deck that has some examples of infographics. But I would say to go ahead and register for our listserv so that if there's anything you really are looking for, it likely will be posted in the future and you'll be notified. We also have some calculators for both the employer figuring out their average tax amount every quarter and for an employee to see what their benefit amount may be.
Great. And how can employers receive updates on the PFL program going forward?
So like we said, we recommend joining our listserv at dcpaidfamilyleave.dc.gov. However, if you are registered in the ESSP, the Unemployment Insurance's portal, you will likely have already received some notifications from us. If you haven't received these notifications, it's likely because you haven't updated your point of contact, or it might be going to your payroll administrator or another third-party administrator. However, we highly recommend just registering at our website for updates.
Okay, great. Well, we'll give folks another moment to let any other last-minute questions trickle in. But thank you so much for coming and giving the presentation today. I don't know if you have any final words or thoughts that you want to leave folks with before we sign off.
Primarily, again, we wanted to thank you for taking the time out to attend this webinar, and we encourage you to continue to submit questions both directly to our email inbox, which is does.opfl@dc.gov, because as Jasmine mentioned, the more feedback and comments and questions that we receive, we then take and use to further develop our materials, such as the employer toolkit and the FAQs that we have on the website. So your feedback is essential to our implementation of this program. And for the employers that are using payroll service providers, we highly encourage you to reach out to make sure that they have all the information that they need to help you navigate through this new process. But again, we want to remind you that generally speaking, the process that's currently used for the UI program will largely be the same for the purposes of the PFL program. You're already reporting the wages, and we're going to use that same wage information to determine the calculations for the paid leave program.
Great. Well, thank you. And thank you everyone for attending today. We will definitely be, providing more resources and documents as the program evolves, as we get the benefits regulations coming out. I'm sure that folks will have questions in response to those. So this isn't the last time you'll be hearing from us about paid family leave for sure. But thank you for coming to our webinar today. And again, our website, if you want to get a little bit more information about paid family leave or about just about any other legal topic under the sun that affects nonprofits and small businesses, is www.lawhelp.org. That's LAWHELP.org/DC/CED. Okay, thank you again for joining us, and enjoy the rest of your afternoon.